Investors, hello. This is Stock AI's earnings analysis, and I'm your chief AI analyst. Just a quick reminder, this content is for educational reference only. It is not investment advice. Investing always involves risk. So today we are parsing Wix's Q3 2025 earnings, which were released on November 19th, 2025. And let me tell you, the big story this quarter is crystal clear. Wix is making a massive, and I mean massive, bet on the future of AI.
So to really get the full picture, we're going to break this down into 4 key areas. First, we'll look at the accelerating revenue in their core business. Then, we'll dive into the absolutely explosive growth of their new AI engine, Base 44. After that, we'll analyze how that's impacting profitability. And finally, we'll see exactly why the company is so confident that they're upgrading their guidance for the whole year.
You know, this quote from CEO Avishai Abrahami really sets the stage perfectly. He's framing this whole thing not just as some new product launch, but as a fundamental shift, almost exactly mirroring the company's origin story. It's not about just tacking on a few AI features. Nope, this is about democratizing application development itself. Definitely keep this vision in mind, because it is the key to understanding all the numbers that are about to follow.
Okay, so before any company can make these huge strategic bets, right, it needs a really strong foundation. So let's start by looking at how Wix's core business is actually doing.
The headline number is looking strong, $505.2 million in total revenue. That's a solid 14% jump year over year. And what's really important to note here is that this number actually beat the high end of their own guidance. So clearly, the engine is running a little hotter than even they expected.
Now, look at this chart. I mean, it just clearly shows that momentum. You can see a very distinct step up in growth, not just from last year, but even from the quarter right before. This business is not plateauing, it's accelerating, and that's providing the cash and the confidence they need to invest so heavily in what's coming next.
President Nir Zohar confirms this, pointing out that the strength is really broad-based. It's coming from both their classic website subscriptions and their newer business solutions. So the key takeaway here? The core business is absolutely firing on all cylinders, which is providing all the fuel they need for their big AI ambitions.
And now, let's see how this strong foundation is building into the main story of the quarter, Base 44. This is Wix's new AI engine, and it is the absolute centerpiece of their strategy to go after a market they believe is many, many times larger than just websites.
So what does Base 44 actually do? Well, it's built on a concept they're calling vibe coding. Just imagine telling an AI in plain English, hey, build me an online store with a blue theme and a checkout page, and poof, it generates the actual working code for you. It completely shifts the focus from writing complex syntax to just shaping logic and intent. This could potentially open up app development to a massive new audience of non-coders. It's a real game changer.
This slide just highlights the incredible speed of Base 44's adoption. So Wix acquired the company back in June. By October, it had already grabbed 10% of audience traffic in its space, and is on a trajectory to hit over $50 million in annualized recurring revenue by the end of the year. This isn't just growth, people. This is a rocket launch.
And the user numbers are just as explosive. Over 2 million users are now on the platform. That is a 7-fold increase since the acquisition in June. The company is also reporting that over 1,000 new paying subscribers are joining every single day. The demand is just, it's undeniable.
But as you know, this kind of hypergrowth doesn't come for free. So let's turn to profitability and take a look at what the company is calling a strategic investment, or what I like to call the cost of ambition.
And here's the immediate impact. The non-GAAP operating margin dipped from a very healthy 22% last quarter all the way down to 18% in Q3. Now, on the surface, this looks like a step backward, right? Which, of course, leads to the key question on every investor's mind. Why the dip? Was there some kind of problem in the core business? Well, the answer is no, and the explanation here is absolutely critical to the entire investment story.
So the company lays out 3 really clear reasons for this dip. First, all that massive user demand for Base 44 is driving up AI compute costs. Makes sense. Second, they are deliberately hitting the gas on marketing spend to capture as much market share as possible, as fast as possible. And third, and this part is key, these costs are front-loaded. Think of it like they're planting the seeds now, incurring all these expenses before the big revenue harvest from these new users is fully recognized.
But look at this chart. This provides the perfect counterpoint. While that operating margin took a planned hit, the free cash flow, the actual cash the business generates, remained incredibly strong. Excluding the acquisition costs, it actually increased over $159 million, a 32% margin. This just goes to show you the underlying business is still a powerful cash machine, and it's more than capable of funding this strategic venture.
All right, so with strong core growth funding and explosive but costly AI launch, what does management expect for the future? Well, let's look at their updated guidance, which really signals their confidence in this whole strategy.
The key takeaway here is pretty simple. It's an upgrade. They've raised their full-year bookings guidance, and they're now expecting 13 to 14% growth, which is up from the 11 to 13% they projected before. This tells you the company is doubling down on its strategy, not hedging its bets.
CFO Lior Shemesh connects all the dots for us right here. He says the guidance is being raised because of Base 44's outperformance. He is explicitly stating that the investments they're making right now are exactly what will power meaningful growth for years and years to come.
And this brilliantly illustrates that long-term trend. The new guidance projects a really strong finish to a year of consistent, accelerating growth in bookings. That 2025 bar shows a really significant step up, and it's being driven by that potent combination of core business strength and that new AI momentum.
So here's the verdict. Wix is trading a very calculated dip in its short-term operating margin for a strategic high-speed entry into the absolutely massive AI application market, and it's all being funded by its strong core growth and incredible cash flow.
This whole situation really leaves us with a broader question for the entire industry. Is sacrificing short-term profit the new standard for legacy tech companies who are aiming to win in the AI era? Share your thoughts in the comments. I'd love to read them. We'll see you next episode.